Hey, what's going on, everyone? My name is D. Anthony with Evolution Traders. What I'm going to look at here is the Nasdaq futures, and the reason why I'm going to look at the Nasdaq futures is because today we kind of swept yesterday's highs, and then we had this reversal. Okay, so we've got FOMC tomorrow. One thing that I want to kind of point out is that notoriously, FOMC. Price action can be all over the place, right? Especially early in the morning. A lot of traders, they want to trade so bad and they want to make so much money, and they're getting those setups, and then they just don't follow through, and they end up taking a loss. And then they find another setup, and then they take another loss. And, it's just a notorious day for, if you really just sit back and you be patient and you kind of just let the day unfold organically, you're going to see the bigger picture a lot more clear than just trying to race to take a trade for the sake of taking a trade. Now, one thing that I want to point out here with the Nasdaq 100 is today we closed back underneath the 5-day moving average. Now, is it significant? A little bit. Is it, detrimental to the overall market? Of course not, right? But if you notice the daily chart and you notice where we kind of stopped today, we stopped at these lows from yesterday and the prior day. So we're creating this line in the sand. You can actually see, the markets have opened back up here and we're trading below that. But you can actually see that if we are to start losing the bottom of this range, it's going to get beneath, this rising 10-day moving average. Now, the reason why this may be a little bit significant is because if you kind of go back in time 1, 2, 3, 4, 5 days to the 24th of January, you can see that we topped out at this upper channel at 17,793. Not only did we top out, we hit it to an absolute T, right? So when we hit this upper supply zone, we came immediately back down. We failed to confirm and get over, and we kind of have just been trickling downwards here, sideways downwards into this rising 10-day moving average. Now, one thing that I want you guys to kind of keep your eyes on going into tomorrow, going into the pre-market, going into FOMC, is that if we really start confirming these lows here, and these lows, being 17,457, which obviously right now we're trading a little bit below that, but again, it's still very, very early. But if we start to confirm, look at the 23rd. Notice the 23rd, the low wick here is 17,409. If we start to confirm this area, you can see that the Nasdaq has a lot of room down here into this rising 20-day moving average, sitting at 17,130. So again, we've got a lot of potential for a potential pullback. Now, that's going to be very exciting for some of you guys who, have been irritated that the market continues to go higher and higher and higher, and something's wrong with your buy button, and you're always looking for pullbacks in an uptrend. Well, this might be your opportunity here to finally get your pullback. Now, again, for you long-sided, bull-biased traders, is it the end of the world for you? Of course not. What you want to see is that pullback. So again, for you, be patient. Allow things to pull back into rising support. That's when you're going to make your money, is when those sellers start to get trapped. Those sellers are going to start to get trapped down here in 17,134, but they definitely can start to take over here for the short period of time and make some good money on the way down. Now, I just want to briefly bring up this 1 hour time frame because this is going to paint a little bit of a different picture. So if we notice here, let me kind of zoom in just a tad. If we notice where we're trading at this given time in the after hours on the 30th of January, notice where we've pulled into the bottom linear regression channel. If you notice all of these, moving averages, all of these SMAs and EMAs and Bollinger Bands and all this jazz, notice how there's nothing underneath. So if we do start to confirm and we start to lose, notice how there's nothing there. If we do start to lose this, we could be looking at a continued flush. Now, don't get overly excited, because typically when we hit the bottom or top of a channel, yes, we might wash it out, but it might be a quick sweep for an immediate trap back up to the upside. Now, does that mean that we're going to be taking out highs, in the next few days or in the next hour? Of course not. but you could definitely get a pushback into 17,500, 17,600, chop around a little bit, and then kind of head back lower. So again, this is a perfect opportunity for a little bit of a dead cat bounce into 17,478, 17,500, 17,540. Those would be the areas that I would try to be targeting on the way back up. And again, if we do stall at any one of those areas, and then we cannot confirm to keep holding that price up there, if we do start to lose 17,410, then look for that big short opportunity. Because again, let me get back to the daily chart here. If you notice, okay, if you notice where we're trading at right now in these after hours, if we confirm that 17,410, we've got the room down. So again, stay on your P's and Q's. Don't be over anxious to take a trade. Just allow these levels to come to you. Allow the price action to develop. Understand that there's a two-sided trade going on between now and FOMC. So what that means is for you day traders and you scalpers, price action can be a little bit choppy because we're in a little bit of a battle zone. But just understand that if the selling pressure is down off of FOMC, we've got potentially 200-300 points worth of room that we can trade to the downside. If the reaction is good off of FOMC, we can definitely start to push highs back up towards 17,700s and 800s, and then put in a new leg to the long side. So it's going to be a very, very exciting week here. We've also got a lot of earnings that are, kicking off and getting underway. So again, a lot of opportunity to make money here. The main thing that I want you guys to focus on is being patient and allowing these levels to confirm, not taking so many trades each and every single day, managing your risk, playing the proper account size, meaning you're not trading 15 mini contracts because you've seen some YouTubers streaming that, they're making $20,000 a day. Guys, you have to trade what is right for your account. If you're one individual trader on a $25,000 prop firm valuation, there's no shot in hell where you're trading multiple mini contracts without running the risk of blowing yourself up. You got to be more realistic. If you had 20, 25, or $50,000 accounts, now you can kind of spread your risk out a little bit more, and you might be able to trade that bigger size. But again, understand where you're at in your own trading journey. Don't try to keep up with the Joneses. Continue to do what's working for you. And if something is not clicking and something is not working for you and you're trying to figure out what's wrong, why you can't see the market correctly, join Evolution Traders. Let's set up some one-on-one mentorship. Get yourself inside the community and around other traders who are doing this on a day in and day out basis. So maybe you can start to learn the skill set and learn some of the things that you need to learn to help you become a better trader. I have one space available as we roll into the month of February. I'll see all of you guys who decide to join on the inside. For everyone else, like, comment, and subscribe, and I'll catch you guys on YouTube later.